traders, welcome to the TMT stock market strategy video for Tuesday, June 14th. Well, the analysis played out yet again, and technical analysis does not lie. As long as you know how to use this art, you can make a lot of money here, guys. Now, this is those of you who follow me. I got a bunch of good emails. Hats off to the people that are making money, and actually the longer-term investors sent out a few emails saying, you saved me a lot of money so far. Thank you very much. Well, this is an informative video. You need to check up on your own analysis work as well. This is our free video, and make sure it matches what your technical analysis overview is. Now, my trading model is a little different, and obviously there's a lot more to it than just a 6-minute video. But I enjoy putting them out there and getting the comments. So continue to please email me and share your comments with me. I love to hear it. I like when all you guys are doing well off of these videos. And I mentioned the breadth of the market. Internals are doing lousy. And you have some of the pundits saying that the internals are doing well and doing great. Well, hey, look, we had 3 days down. We wiped out 9. That whole little stupid move, excuse my language, from the lows, wiped out just about 2/3 of it in 3 days. And that's what happens. Risk happens extremely fast. Okay. So do your own analysis work. Don't listen to anyone. Don't listen to me. Do your own work. Make sure whatever I say, or at least what the analysis says, matches with your technical overview. Okay, really, really important. That's how you'll learn. And this is, this is not hard, but you need to follow and put together a trading model like I do, like I have been for many, many years. And some technical, sometimes it's wrong. Sometimes it just doesn't happen, and that's fine. And if you're trading, you make sure you're not stubborn with your stops, and you get stopped out. You get stopped out. It's part of the game. All right, let's get right to it because I want to share with you a few things. This is what I've shown you before. The NYUD advanced decline with volume, and I said, guys, lower lows, lower highs. Doesn't look like, why did this make new highs here, right? We made new highs here and here, but look at the difference. We made new highs here, and it made new highs, okay, from this move up. Fine. Well, we made new highs. Didn't make new highs, but we tried to challenge it, made a lower high. This, we took out the highs way further than the last time, and we didn't even get to take out this high. That's negative divergence, guys. There's no two ways about it. Negative divergence played out in the internals of the market, the breadth of the market, and there are many more to show you that I've had, but it's just too long in the video to show you. Next is the VIX, and those of you, many of you have traded the VIX. It did very well on the calls that we had. We said 12.5 long-term support. If it takes out 1750, goodbye shirt, and sure enough, it gapped up and never stopped. Why? And I mentioned on the other video over the weekend and on Monday, I said, guys, when I see the VIX that was down here, when the VIX, you always have to monitor the VIX, even if you're not a volatility trader and you don't want to trade volatility, that's fine, but you need to monitor, because what happens is these large funds that long only, that can't short the market, they have to hedge. And what do? They go out like big whales and just take offers of the VIX. And now this is extended, so you're absolutely not going to buy it now here. And you should have, for those of you who did not manage to either liquidate or hedge your long portfolio, you should have done so when volatility was extremely cheap. You could have bought puts here. Now it's at $21. It doesn't make any sense to do that. I mean, you can, but more than likely, maybe we get another gap up and then we start to come back in again, okay? We're outside of that Bollinger Band, and like I mentioned before, you can see the RSI just getting a little long in the tooth. I mean, this went from 12 to 21 in a matter of 5 trading days. So you understand where I'm coming from. I mean, you got to be careful with chasing anything. Remember, it will come back. So great call on the VIX as well. And now I'm watching it for a move like this. We close inside the band. That'll give us a small buy signal for the market, which is fine. What I suspect what will happen is if we get a pop up and we have Janet Yellen, we have the 2-day Fed meeting for interest rate decision that's due out on Wednesday. And I do think that, and I make a comment on this now, Fed fund futures are pricing in not a rate hike in June. They probably might go in July. Well, they have to go either way. So if they don't raise rates, I believe this is priced in. The market will, knee-jerk reaction will be to the downside. If they do raise rates, it's definitely going to be a shocker. The markets will definitely roll over. No question about it. Either way, they have to raise rates. Even if they set off, they don't raise rates for June. They should be going to July. So next is going to be, I want to show you the McClellan oscillator, and you can see here a very good measure of overbought, oversold. I mean, very reliable. We're only at 41, guys. I mean, 780, 90, even a little below 70 even. So there's a lot more room to run, and I would suspect that we run a little further, maybe tomorrow, or even tomorrow and Wednesday into Fed rate decision, and then we'll see what happens from there. We'll go from there, okay? Now, you still have to, if you're short, you still have to think about buyers of dips coming in, because it's still, remember, guys, they've been buying dips since 2009, buyers of dips, and everybody, it's bullish, and the market's cheap here. It's not cheap. It's 17.8 times earnings, fairly and fully, to me, fully valued in the market, and we need a correction. There's no two ways about it. We went up on nothing based on what the Fed comments were and talking hawkish, dovish. It doesn't matter. We should not, the markets in itself need a break, okay? And even if we get a 10% pullback, it's still, I would love to see a 15 or 20% pullback, and then I'd buy the market with two hands. But right now, obviously, we have to trade what we get. And UUP, there's a dollar. I just want to show you. Like I mentioned, don't count the dollar out. When we have some fear, you're going to see the dollar come into play. Now, here's that VIX trade. Remember, we said the VXX, big move up. Right now, back into support, and we'll see what happens outside the band. Maybe another big push up tomorrow, but I would suspect that we probably get a little bit of a break, and you can probably buy this on the next pullback. And what do I mean by that is that the market comes in, right, makes a higher low from this low, and then she starts to catapult much higher. Okay, that's what I'm talking about. Not right now. I wouldn't chase the VIX at all, but the VIX is showing signs of fear that these fund managers are looking for protection. Okay, next, spiders, clean, just price, and of course my volume zones next to us, and you can see I put out here a very important low to watch, 202.77. Why? That was the start of this small, crazy little move up, almost straight up every single day. Okay, so got everybody long up in these areas, and what happens? We failed. Okay, remember, markets are made to fool the masses. So this is something where I'm watching. Do we get right down there, straight down there? I mean, look, we can. We rallied straight up. There's no reason why we can't rally straight down. Sell off straight down. So it's something to watch, but I do suspect that the first stop will be somewhere around 206 and a quarter, 206, call it. That's a 23% retracement. But I am looking for a little bit of a deeper move. I'm looking for a price target somewhere around 38%, which comes in just underneath that important swing low. All right, so right around here, which is 200, which would be 2,000 in the ES, and that's a very, very important psychological number that we need to watch. Okay, all right. Now let me get the other chart, and I'll show you. We'll get right into it. Okay, spiders daily. The next really small target is going to be 207.51, and if you see here, and I want to show you this, there's that little gap up. The top of that gap, that close, is 207.86. So 207.06, that could be a good flush, maybe an overshoot. Fill the gap, maybe chop around a little bit. And here's what I'm thinking. Okay. And again, I like to put these anticipation, just these patterns, what to be, what if. And if it does start to pan out, then you have an idea. But if you look at, we get down to here. Right? Maybe we chop like this for a day or two, and then get up to this point, but make a lower high, create an M formation, okay, like this, and then neckline that 50-day, which would be the bottom of this candle here, and then really start to break down, taking out that swing low. That's what I think will happen. Excuse me. I mean, really, I don't know if it's going to happen or not, but that's what I'm looking for the pattern to be. So, because it looks really nice. It's a nice shaping up like a real nice M formation. As long as we get a lower low from this previous low, and then I think we get that little pattern here, neckline, and then we start to sell off. And then I'll put some big downside targets in on the daily chart. 60-minute, I mentioned to you early last week, I said, guys, What do we have here? Negative divergence. Keep an eye out. Negative divergence forming right back in here. We broke down, and look what happened. Now we're selling off. Now, target on this is 206.45. So that coincides pretty nicely, right? With right around here, that 206.50, 206.45 for this other area of resistance, which is now support. So, again, a lot of these different time frames are shaping up to be really identifiable of good support. So that's what I'm looking for. And again, write these down, put them on your charts. Transports, you could see, failed miserably. And that's what you want to see, right? You want to look for that little kind of correction. Remember I said we had that little M formation, okay? And that's still valid, believe it or not, because why? It did not challenge that right shoulder. So that's still valid, and I like to see a break below that. If transports can continue weakness, it's going to help the market sell off. Also, banks and financials are doing just miserable because the yields continue to go lower. Now, it was only down 2 cents. The yields were down 2 ticks, but still not a good sign here, guys. If the banks and financials are not really participating, you got to be careful, okay? IWM, secondary leader, rallying for like 9 or 12 days straight. Absolutely lunacy. This is what we have to deal with now with these algorithms. Just crazy. There was no reason for that to rally at all. But still, they rallied them and then they sold off. And this is what we're looking at, okay? Last is going to be the Qs. And the Qs from this rally, that next gap fill is going to be this area here at 106.45. So just kind of keep an eye on that here, okay? All right, guys, look, I hope it helps. I'm glad to hear everybody's doing well. Any questions or comments, please send the email out, support@tradingmarkettechnicals.com. Have a great trading day. Take care.